Okay everyone, welcome. In this video we're going to do some Sunday stock market prep work, getting prepared for next week. I'm also going to cover some subscriber stock picks, so it's going to be kind of a combined video. Let's get right into it. Leave me a thumbs up if you guys find value, and I know several of you do. And again, we try to point out stock trade ideas on this channel. I don't always get all of them right, but often I get many of them right. And then in general, I try to make general stock market calls as well. All right, so here we go. Nasdaq futures. The one thing is, negative divergence is right there. So you can see momentum is still up, and you can see the PPO, we're going up like that. So momentum is still up. You do have negative divergence on the PPO as well, right there. So here's what we got. We've got negative setup with positive momentum. But the divergence tells me that the momentum that we were seeing in these new highs up here in price is less than what it was before. So momentum to the upside is starting to fade. On this last rip higher here, the momentum was pretty strong. And now recently it started to fade. So that is what we're looking for. In the short term, I got an hourly chart. And I've got this upward trend line right here on the Nasdaq futures. And we are waiting for those to break. You can see here they popped it on Friday and it was dancing around. But again, still closed right at basically support or resistance, right at the level. So it didn't really go anywhere over the last several days. It pretty much just stayed right at this 12,510 area. And so we got to wait for a resolution on that. SPY futures, I haven't been following the SPY futures as much because the Nasdaq futures are kind of telling me a lot that I need to know. And if the Qs and the tech sector sells off, the whole market's going to sell off. It doesn't matter if the airlines are rallying and the banks are rallying. If tech is selling off, the market will sell off. The market recently, what's happened is tech hasn't really been moving higher, but it hasn't been moving lower either. And then some of these other sectors and stocks have been moving higher. So the market's been moving higher in general, but not on the back of tech. So if tech falls, the market falls. That's basically it. Here's your SPY futures, upward trend line right here. We do have negative divergence that has been, continuing to build, and it's there, and then it's really been building since back here in November. And so we are waiting for some sort of a sell signal or a breakdown, or the divergences to get burned through. Again, divergences are not a reason to short. They just tell you there's a high probability of a downward move coming, but divergences can get burned through. If the momentum continues to be strong and you continue to move up, you burn through the divergence, and that's bullish in general. I mean, there's nothing bearish about that. If that happens, that's very strong, and we'll kind of evaluate that if it comes. Okay, so triple Qs, here's your upward trend line, waiting for that sell signal. Negative divergence, cleanly intact. You can see it here. It's on the hourly, right there, and it's also on the daily, right. Well, you can pretty much see it, but it's right there. So we have negative divergence across multiple time frames, and we have a slightly new higher high. We're losing momentum, telling me that we're going to get some sort of an impulsive breakdown. You just got to sit there and wait for it. Moving on to the SPY, same deal. Here's your daily chart, negative divergence on the daily. So all this price action is divergent high. Equally, right up here at about 380 now, is a major resistance point. And that major resistance point has proven to be really the top in the market for a while. You can see here on the daily going all the way back to 2009 lows. This is logarithmic charting. So if your chart doesn't match up, switch to log scaling. I teach all this in my training course and my technical analysis course. Link in the description below if you want to learn how to do this. And you can see here moving up, there's your support on the daily, held it again there, cluster right through here. We broke in 2018, and you can see kickback rally rejected, and then in 2020 came back up, rejected again, and then rejected. Here's your COVID drop. And where are we now? Well, we're just coming right back up for another back test. So bull market trend line has not been recovered from the 2009 lows. This is a back test or a kickback rally, and this really strong impulsive move, pretty much a Fed induced. Let's all agree to that. You know, money printing, interest rate drops, that, you know, stimulus induced, not based on earnings. And we are running right up to major technical resistance. So do we get there? I don't know. From my perspective, it's not worth trying to game, you know, to see if we do. You know, it's not worth it to see if we pop to another 2% up, or maybe even overshoot it and go a little higher and then get rejected impulsively. For me, I'm looking for more the downside. And, you know, going back to the COVID drop, we're kind of in this area right here. This is what it would, you know, kind of the area. So in this area, do you want to go long or be long? I mean, yeah, you can stay long, but, you know, you had about a 2.5% upside, and the downside on this move was obviously 34%. So risk reward, it makes no sense to be long or to look for longs or anything. Excuse me. And you can look for longs, I mean, in specific sectors. I mean, when markets fall, some stocks do really well. And so there's obviously some longs, but long growth, you know, it's not long tech. It's not something that I'm interested in. I'm looking at shorting. That's just me. You know, I've been looking for a bear market since we broke in 2018. And, you know, we started one here, the Fed stepped in, started another one here, the Fed stepped in. What's the Fed going to do next? You know, if we start to sell off, maybe they're, you know, what are they going to do? They're going to just continue to print money? Well, if they do, that's okay. We'll just transition and pivot. And that's why the gold miners are of interest to me, because if the Fed decides to not let a bear market happen and they're going to just literally print and buy stocks or buy, you know, they're not buying stocks, but keep the monetary system flowing with liquidity, then the dollar should suffer. And let's go to the dollar just to look at that. So the dollar is suffering clearly, and you can see pretty impulsive sell-off or breakdown last week. The one thing I'm looking at, which is interesting, if we turn up here, I'm not saying we're going to, but if the dollar starts to turn up, and I would expect that would happen on a market sell-off. So if we get that impulsive sell signal, the dollar should find a bid, and we turn up, that's going to create bullish divergence in the dollar. See the dollar right down here? I've got it marked out as a potential bullish divergence. It's not confirmed yet. But if we turn up and the PPO crosses, kind of makes a bullish crossover, then that would be a confirmed bullish divergence and something to watch for. All right. Again, you can see we got this downward trend line. I've adjusted it slightly, but here's kind of what I've got going on the hourly. You can see we started to tag that support and hold and started to turn up. Also on the dollar, we had this downward price channel right here. Not a lot of reactions, but we had 3, and we started to break higher. So that's a small, breakout higher. I'm waiting to see what happens kind of on the daily, but potential for bullish divergence. If there is bullish divergence, bonds, especially the long-term bonds, should do well. So let's look at that. Here's TLT. You got the daily here, and we do have bullish divergence on the daily. We do have a bearish crossover. So you see here on the PPO, see how it's made a bearish cross. So it's not a confirmed bullish divergence on the daily. But again, if we could go a little bit lower, and you can see here on TLT, we've held support here, held support, held support. So if we dip down and tag that trend line again, and we do it soon, that will be a divergent low, which means that is the area where it is potentially objective to go long the bonds. And so if, that again, that's it. It's an objective area to go long when you have bullish divergence and you're hitting support. And so if that plays true and the dollar, we do get that drop in the market and the dollar does turn up, then, I could see bonds breaking higher, running up, running up to this 172 area. And that would potentially be a trade of about 13% or so. So we'll watch for that to see how that plays out. Okay, gold. Gold is, I'm not so sure. I am long Barrett gold. However, I'm not 100% confident in what I'm seeing in the charts yet. So here's what I see in gold bullion. We have we don't have a divergence. We have downward momentum. You can see here just recently on Friday, gold sold off, or sorry, not Friday, but back here when gold sold off, continued the downward momentum in gold on the daily chart. So gold is down. It's downtrending. If you run, let me run this trend line out right here. And this is really your trend line right there. So I could see us running up and hitting this 1870 area, 1860, depending on when we get there. Maybe we get rejected there. Momentum is to the downside. So if you look at the hourly, though, we also, momentum's also to the downside on the hourly as well. So negative divergence actually taking place in gold on the hourly. And so that's something to watch. You know, there's no bullish divergence. I usually like to see bullish divergence on the daily chart on a stock when I'm anticipating kind of a major trend move, and we just don't have that yet. We do have major support though on gold right there at 1790. Going back to the 2011, 2013 area, you can see we overshot it briefly, but again, one data point doesn't make a trend. You know, you need at least 3, and you've got those right there. Tag at resistance, tag at resistance, tag at resistance. Trend line, resistance validated, and as you come up, it validated it again on the breakout, right? Let me zoom it in. Right there, you can see when we got above it, you had an impulsive breakout. So that's a breakout, and we came in for a back test. So major support right there. Now, can we chop around this level a little bit? Sure, and that's kind of what I'm expecting actually, is that we chop around this level, kind of undercut the lows, recover. Then we'll create bullish divergence in that process and then start to move higher. That's what I'm anticipating. I don't know if it'll play out, but we'll watch the charts. Okay, I haven't talked about volatility for a while, but we'll see. I think we're going to get a market sell-off here shortly, and volatility should rip to the upside. We have a bullish falling wedge here on the daily chart. So you can see it's just grinding, compressing lower and lower. So we have that intact, the bullish falling wedge. And we do have bullish divergence. You can see here on the daily, we are making equal, slightly higher lows actually. If I move this line, you can see there's your low right there. And if I grab this one here, it's slightly higher. So bullish divergence, bullish falling wedge, we need a buy signal or a break of the trend line. So again, you can anticipate it and start to, sometimes with volatility, what I like to do is just anticipate a break higher. So I start to build a position slowly. So I'll take a small amount of shares, and as it continues to drift lower, because volatility typically drifts lower, as it drifts lower, I'll add a little bit. So I'll build a position, and I never have a huge position in volatility. That's like the icing on top of the cake. So what I do with volatility is take a small position when I'm anticipating a larger move down to the downside, and then when you get that impulsive kind of the moment when everyone realizes, oh, you know what, this is selling off, then volatility has that explosive move higher, and I sell into that. I take my profit on volatility. I might keep my shorts, but I'll sell my volatility as everyone scrambles to position from calls to puts. That's essentially what's happened. Once they have their positioning in puts, then usually the volatility spike is over. So in the move from transitioning from calls to puts, the volatility spikes and I sell into that strength. So again, if you want to wait for the breakout, then I got this bullish falling wedge right here. Maybe a break above that might do the trick. There's also a gap back here at 1280. So if you wanted to be extremely conservative, you could wait for a break higher above 1280, and that should do the trick to get this thing moving up to some of these price targets up here. Okay, let's go into some subscriber picks. JWN, Nordstrom's. All right, here's what we got on this. Daily, you've got a trend line right here, reaction, reaction. So there's 3. And then just recently, it's been shooting straight up, pretty much parabolic, right into resistance, and it's overshot it a little bit. When you have really strong momentum like this, it's pretty common to overshoot it, and that's what it's done. I suspect we get rejected right in this area. Another thing that gives me pause and why I think we get rejected here is The RSI right now is trading on this daily chart up around 84. And I looked back at when I could see an 84 reading, and I couldn't really get an 84 reading till back all the way back here in 2003, right there. And yeah, that was the beginning of a big long bull market. Doesn't mean that's what this is, you know, that doesn't mean this is the case. But again, that's what I'm saying. So extremely overbought and right at resistance, overshot it a little bit. We'll see how that plays out. If we get a pullback, probably going to get a pullback down to, looks like we got a reaction right there. That's where they did it at. So yeah, right about there. So if we get a pullback, probably get a pullback down to about 25 bucks. And then maybe it has the energy to break through, but that's what I see on that one. No negative divergence though. Again, there's no negative divergence on the daily. So that is not necessarily, you know, it's not a setup for a short. I'm just trying to point out what I'm seeing. Could go higher, of course. All right, next up, AAPS. Let me find this one. Sorry, APPS, Digital Turbine. I don't know anything about this stock, but here's what I see on the daily. Big negative divergence, cleanly intact. Very, very clean negative divergence. So momentum has really been fading since about right here. This is where you started to put your negative divergent high in, and all these new highs are divergent highs. Divergent highs are not a reason to short a stock, but they are a reason to be on the lookout. Also, looks like we've got a bearish rising wedge right here. Got a couple reactions right up there, 3. So bearish rising wedge, negative divergence, telling me we're going to break. I see this minor trend line right here. So you go over the hourly, had a couple reactions, 1, 2, 3. So I think a break of that, an impulsive breakdown of that will set us down to the lower trend line. Maybe we get a couple reactions there, maybe even bounce all the way back up. And then a break of this lower trend line should really put this in play for a gap fill all the way down here at about 1635. So I'll be on the lookout for bearish price action on this one. You know, if you break, depending on when we break, you know, potential for about a 50% gain or so in a short trade. And so, yeah, we're going to watch this one. Someone asked me about KHC. This is one that I'm interested in being long, but I kind of want to go long it down at this $25 range. I'm looking for a move down to $25 for this potential bottoming pattern. See this head and shoulder potential? So we got a left shoulder ahead, and I'm looking for that right shoulder as an area to potentially go long this. Now, we don't have it yet. You know, we've been kind of moving higher. There's no negative, you know, there's no real negative divergence. Yeah, we kind of are starting to build it, but it's not confirmed. So it's not clean enough to say it's negative divergence. We have upward momentum, upward price action, and that's all I see in this one as of right now. Oh, if I do scroll out, there is a negative divergence that's been intact for a while. You can see all the way up here. This is a negative divergence where we made a new higher high, and you know, it was a marginal new high in this pattern here. So again, I'm still looking for that $25 range. I think we're going to get it. We'll just have to wait and see. Uber. All right, we've obviously been moving up. It's a reopening play that people are making. Negative divergence here on the daily. You can see we're starting to build. And, you know, it is confirmed as well. See the PPO right here, how it's done the crossover? You have a bearish crossover. Now, this could be a whipsaw and it could break higher, but again, it's there as of right now. So what I'd wait for on this one is a break of this upward price channel. If you go here, you can see here on the hourly, we're just kind of, let me see if there's any kind of a bearish pattern. Yeah, not really, but we could maybe mark that out. I'd wait for a break, an impulsive break of this trend line right here, 51, depending on when it comes. And you get that impulsive breakdown, that should set this in motion for a gap fill, which is likely to, well, you've got some support right here about 38, let's call it 38.50. It's right about 38.50, 38.70, something like that. I'll have to tighten that up. So maybe you get a move down to there. and then we'll see what happens. Until you see that sell signal, trend is up. Okay, PLTR, Palantir Tech. I don't know what they do. But again, probably some sort of a stay-at-home play or cloud play. That's you know, when you hear a lot of my subscribers ask me about the cloud plays, and so you know that they're kind of speculative crowd favorites, and those are usually the best shorts. So when you get the sell signal, this one, you know, I see. So this one had negative divergence, but it's kind of reacted now. So here's your negative divergence right there. See it? So there you had a new lower high in the RSI, and that was made on a new higher high in price. So a divergent high, and that played out for a drop from the top to the bottom of about 37%. So maybe that's all there is, you know, maybe that kind of satisfies that divergence. So again, I don't have a clean read on this one. I don't see bullish, you know, I see bullish momentum. There's no divergence, so you can see just bullish momentum, bullish price. Usually when you see this without the divergence, you don't see like a bullish divergence. You just see bullish momentum. To me, that signals that this is just a counter trend bounce in the downtrend. The downtrend was started right here on the negative divergence. You move down. Then momentum starts to move up, the price starts to move up, but this is just a counter trend bounce, and then you continue the trend that was made on this reversal. That's usually how I see these things. And then when you start to see bullish divergence show up, that is typically signals the a reversal of that trend that you're in. All right, ROKU here, negative divergence right there, and we're continuing to extend that negative divergence. So all this price action here has been divergent highs. If I go to the hourly, or the daily, this is the uptrend line. So you got to wait. You know, I think it's prudent to wait for a break of this trend line with a big sell signal. And it's a ways away from it right now. It's about, 24%. There might be a better entry if we can mark out some sort of an hourly divergence. You do have a minor trend line right here. It's about right there. You can see we got a reaction here, and then we were just walking up that. So maybe if you get an impulsive breakdown of that, that might set this in motion down to this major trend line, and then you got to wait for the sell signal on that one. You can see on the hourly, we continue. You know, the negative divergence is clearly there on the hourly. On the daily, it's also there. There's your negative divergence right there. So all this is divergent high action. I think this one sells off. You just got to wait for that sell signal. So I might take a short if we break this hourly chart here and then trade it down to here. We'll see. Etsy here, negative divergence. So this price action right up here was a divergent high. You can see the momentum is less than before. And so we're just waiting for a breakdown and a continuation of the sell signal. So here's your hourly chart, lots of reactions, and waiting for that impulsive breakdown there to set this in motion to the downside. This FedEx one really has a nice setup, and it really continues to look good to me. So you can see here on the daily, clear, clean negative divergence right there. Not confirmed yet. We need that PPO crossover to the downside and the RSI to turn back down. But it looks good so far, and all this price action is divergent high price action. You can see it's not impulsive. It's just marginally making new highs, kind of grinding higher on less momentum. That's the price action that you want to see when you're moving high with negative divergence, is not impulsive break higher, but, you know, kind of this puttering out effect where you get, you know, the last of the buyers who don't realize what's going on are buying. It's a transition from the buyers to the sellers taking place, and it's like the sellers are about to overtake the buyers, but they haven't quite done it yet. So you wait for that sell signal here. Bearish rising wedge right here. And we wait for the impulsive breakdown. You get the impulsive breakdown, and I've got a target down here at 183.42. I think we'll get there in short order. And so that is what I'm looking for. Okay, and then wrapping it up with the solar stocks, they've been, you know, kind of impulsive high flyers, the EV stocks. A lot of these things are just in bubble territory, and I'm looking to short them. So it started last week, and really the last couple weeks pointing out NEO as a potential short. And, you know, I started taking it early. Sometimes I'll do that if I see enough signs in the charts that tell me I can step in early. So I took a starter short position early up in here, and then covered it a little bit when we started to cover the trend line. But when we started impulsive, when we got that breakdown, I quickly added that back and shorted that all the way down to the bottom here. And I am short today. So you can see here on the hourly, we're walking up this trend line. We put in negative divergence right there, basically. And then we broke. Here's your impulsive breakdown, and we sold off. About 30, it was pretty good sell-off to start. It was about a 30% sell-off. I think there's more to go, though. And so when you look at the daily here, we've got another trend line down here. I think we're coming down to that trend line. Maybe we'll likely get a reaction and maybe a bounce higher off of that. I don't know. And then if we break that, then we've got some gaps all the way down here at $9.50 and $8. So those would likely be filled if or when we get the breakdown, the impulsive breakdown of this trend line down here, which I think we're heading down to. Why do I think that? Well, negative divergence here on the daily. You can see that this was building, and now we're starting to resolve to the downside, which is what the momentum was telling you it was going to do. You got the PPO pointed down. Everything is bearish in this in the short term. Once we get down to the support, we'll have to examine what the chart wants to do. But from where we're at right now, that's a drop. Still, we got another, 20% or, let's say 20, 25%, depending on when we get there. Tesla is also looking like it's about to roll over. So many of these EV stocks and solar stocks have already had 20 to 30% drops, except for Tesla, which makes sense because Tesla's kind of the king when it comes to these things. This is the crowd favorite. This is the golden boy. This is the general. So this one's still holding in there, but starting to put in negative divergence. And you can see it right there on the daily. So you can see this price action here. This slight marginal new high was a divergent high. We also broke this trend line. So here, this rally right here, this impulsive rip higher, this is the being added to the S&P 500 rally. The buyers are stepping in and buying that. So it's, that's what that is. I think we're going to get sold. It's kind of like this rally back here. This rally back here was also the S&P 500 rally and stock split rally. And then it got impulsively sold into up near the top. This thing dropped 35% pretty quickly in a matter of a week. And I think we're likely to see kind of the same price action soon. And so what am I looking for? Well, as of right now, you have a sell signal. If I go to the hourly, it's just not impulsive, but you did get the kind of the break of this trend line, but it just wasn't that impulsive. It was like a sideways drift. So maybe it wants to run up and do a back test and then reject. You got to wait for that. It's nice to see some sort of impulsive sell signal. Maybe you want to wait for that, but looks like it's coming soon. Just like Run, Run basically. Sunrun, this was I was hearing a lot of people ask me about this one, and obviously, the thing ripped higher. It was uptrending, but then you broke your trend here, and you did some back testing, another back test here, and getting rejected. So I think this continues lower over time, and that's what the chart tells me it's going to do. And then we got some like First Solar that haven't broken yet. So you've got First Solar right at trendline support. And so you need to see an impulsive breakdown for the sell signal on this one, and we just don't see it yet, So again, we got to watch for that. There's also no negative divergence on this one, so this is not my favorite to short. I think there's some better setups on this one or than this one, but again, this is kind of where this is at. It's just kind of hanging in there right at support. TAN, which is the solar ETF, which I might take a short on, big negative divergence right here. I think when I was talking about this one about a month ago, we never had negative divergence. So I was waiting for that to show up, and it has now. So here it is, negative divergence on the daily. We've got this clean uptrend line right here, and we're coming down to support, waiting for that impulsive sell signal or breakdown of support. It'll, when you get the big breakdown candle that sticks and closes, that's your sell signal. And then this thing should move lower, probably, get a reaction here at 57.92. Likely to get a reaction, slightly lower, maybe down here at about 42. I'm going to have to kind of tighten the chart when we start to see those sell signals. Okay, guys, that's all I got. Again, leave me a thumbs up. If you haven't taken the technical analysis trading course, take the course. It's $100. I think that's a great value for the skills that it'll help refine, and it will supplement these videos because you'll have a better understanding of how I approach these charts. You'll be able to find trade ideas for yourself, and that's really the name of the game. Learn a skill, build a skill, and learn to generate revenue from trading on your own. And so thank you guys. I do appreciate it. I'll catch you guys on Monday.